Yes, people, a very happy evening to all of you. So guys, after having successfully completed the first season of your partnership series, we are now heading towards the next season. Yes. So for first season, we have completed the 17 episodes. So we are heading towards the next season, which is valuation of goodwill. That is nature and valuation of goodwill in the partnership series. So my question goes to all of you. I think two schools, they have completed goodwill in their topic, I mean in their school, and rest of you, this topic will be absolutely brand new, same as the previous chapter. Yes. For us, okay. Okay. Now, so guys, this topic is called as nature and valuation of goodwill. In this topic, you're going to learn meaning of goodwill. Guys, when I'm talking, nobody's talking. When I'm talking, nobody's talking. In this topic, you're going to learn what is the meaning of goodwill, what is the nature of goodwill, what is the need for the valuation of goodwill. And once you understand the need for valuation of goodwill, how are we going to calculate the goodwill under various methods is what we're going to look up to into this topic. So let's begin. So my basic question to all of you, from your perspective, you tell me what goodwill is.
Tangible assets.
One by one. Okay, let me note it down. First, online people. Somebody said? Sorry, offline. Okay. Okay. Now, guys, offline silent. Online people, you tell me. According
to expected future profit.
Online people?
Expected future profit.
Hey, that is too advanced. That I should tell. You tell what you know.
The value of the company.
Yes. Online people, I'm waiting.
So the value of the company.
The value of the company. Okay. Basic. Goodwill means what does it strike in your mind? Intangible asset. This is the first thing that has struck your mind. That's what offline people have said. Second, offline people, somebody said reputation. Reputation or the brand image of the business. So whenever goodwill, we talk about goodwill, two things instantly strike your mind. One is it is an intangible asset. Second, it is reputation and the brand image. But in accounting, we cannot record intangible asset without knowing what is the value towards it. Because in accounting, everything has to be measured in terms of money. There should be a monetary value attached, right? I cannot capture and record reputation or brand image in the accounting. Correct? No? What will I record? Reputation account debit to? Correct? So we should have some value attached. So in this topic, we are going to understand what is the meaning of goodwill and how do you value goodwill and how do you record that goodwill. So the third point, which is something new to all of you, is nothing but somebody said online. Can you repeat that point? That was the absolute right point.
Expected future profit, sir.
It is the present value. Goodwill is nothing but it is the present value of the expected future profit, and the word after that is sacrificed. So goodwill is nothing but it is the present value of the expected future profit which is sacrificed. Present value, what it is at CBSE level, you will not get to know, because present value is got one normal English. It's got present value means it's today's value. But in accounting, there is one more meaning to present value, which is more technical. And the concept, there is a particular concept, there's a method in which you will calculate the present value, so which is applicable only at the 12th matriculation level, that is state board level and the CA foundation level. So here at the CBSE level, you will not get to know what is the present value. Yes, you will definitely get an understanding what is the expected future profit. So we have to understand what is the expected future profit. Language wise, it is very clear. We are going to forecast a future profit. But what is the future profit got to do with the goodwill is the connection that you need to understand. So goodwill is nothing but is the present value of the expected future profit. And we are telling that this that which has been sacrificed. Now, what is the linkage of this sacrifice is also something which we have to understand. So to make you understand this entire concept of goodwill, I would like to give a practical example, an illustration, which will help you to understand the real sense of the meaning of goodwill. Now, guys, let's take an example that all of us, are forming a partnership concern. And since I'm foodie and most of you are foodie, so let's start a business which is restaurant, not a chocolate, restaurant business. Let's start a restaurant business. And this business was started in 1819, when all of you were Amul babies. 1819, what was your age? 14, 15? 1890. We started this business 1819. Only wait. Shh. 2018, 19. Wait, 18, 19, 2018, 2019. Okay. Okay. So 1819. 1920, 2021, 21, 22, 22, 23. So which means you've done this business for 5 years. Listen to me very carefully. So this is 18, 19, 19, 20, 20, 21, 21, 22, 22, 23. Now we are into 23, 24. Today we are in 23, 24. So 31st March 2023, we have completed 5 years. Now we started a restaurant business. What is the spelling of restaurant? Is this correct? No, wrong. Huh? No, I am very particular. You tell. But that's it. Restaurant. Now, this restaurant, I'm giving a name called as what? Tasty Bites. Tasty Bites. That is our restaurant business name. Now, guys, we started this business in 1819. Since then, how many years we have completed? Mani, you can tell me. Year 1, 2, 3, 4, 5. So my simple question to all of you, when we started this business in 1819, do you think right from year 1 we have made huge profits? No. Normally, any business when they start, their initial first 2 years are into loss. Depending on what type of industry it is, what is the risk involved, most of them be in loss. But yes, there are certain industries, if played well, then right from year 1 you can be profitable. The profit will be very less, but you can be profitable. Now in 1819, let's assume that our business was profitable. Compared to all the other industries, we were profitable. Now, could you tell me the reasons why in this particular hotel industry, whereas everybody else is into loss for the very first year, and on the other hand, we were profitable. We were very less profitable, but we were profitable. So please tell me, what were the factors that we would have taken care because of which we were into profitability? In other words, if I have to ask one more thing, sorry to interrupt. One more thing, what are the factors that we have taken into consideration that has contributed in enhancing the brand value of our business? First thing. Taste of good. If I talk about taste, first is taste, which means quality of, quality of goods and services. So can I say quality? If you're into business of buying and selling product, the product quality is very important. So here, food quality. If you're in the business of any services, the quality of the services, that is the primary factor that will directly contribute to enhancing your brand value, brand image, or reputation. This is one reason, because if the quality is good, the flow of customer will be very frequent, and apparently you will have more turnover, more revenue, and more revenue to absorb the cost, and eventually will be in profit. So this is one primary reason: quality of goods and services. This is one of the factor that enhances the reputation of the business. Second,
marketing strategy.
price. We'll take. I'll come to that. Price.
Hygiene.
Price at which you offer the product or services. If it is less than other people, if it is less than other people, guys, my head is aching. Please cooperate. Don't make me talk too much. Price is a very crucial factor. Price is a very crucial factor because if you keep the price less, a lot of people will be able to afford it, and you can expect a large turnaround of customers. So price of the products and services what you charge could be one of the factors that can attract a lot of customer, and you giving a good quality of services and goods that will indirectly contribute to the enhancing of your brand value. So that was second thing. Third thing,
Location.
location. Location. Location plays again a very vital role. Now, if imagine you are opening a restaurant somewhere in the interior part of any village or any town, where for people to travel itself will take 10-15 kilometers. It is inside. It's too much interior. Do you think that you'll have the floating population there?
No.
When I say floating population, it is not necessarily people will float and come. Floating is basically walk-in. So do you think there'll be too much of walk-in customers?
No.
No. On the other hand, even if you place a small shop in and around a place where too much of public is floating. For example, here in RSPuram, if I have to talk about, in Coimbatore, if I have to talk about, if you have a shop near mall, or if you have a shop near Gandhipuram, 100 feet road. So too much of crowd, automatically floating. If you have a shop next or besides a big textile shop, like Pothys is there, the Jain.S is there. So just adjacent to it, if you keep a shop, so many people come into that shop. So automatically when they feel like, hungry, they will hop into your tasty bites. That's right. Thank you. So location plays a very, very important role. And if you have a shop in a very prominent location, naturally the value of your business will be significant. In future, whenever you want to sell the business, you will easily find the buyer of your business because you are having your business located in a hotspot where there are too many people attracted towards it. So location will also play a significant role in enhancing the brand value of the business. Third is location. Fourth one. Popularity is what we're talking about. Online people said something. Once again, let me hear from online people. Yes.
Sir, truthfulness to the customer.
Truthfulness to the customer will come under service karna. Can I say management?
Marketing.
Management, good management. If somebody is coming inside, the restaurant, and if there is a customer complaint, right? Hospitality, right? We are talking about. So now hospitality is given by the service staff. But so let's suppose, if you go into any restaurant and you've ordered a dish, it doesn't turn out to be good, and you call and complain saying that this is not good. So there are two options available for those people. One, they will say, this is how I make in my kitchen. If you want to eat, you eat, or else get lost. This is one way of talking. Another way of talking is that you will tell, sorry, sir, really, so sorry for bothering you with the bad food. So we'll change and, give a better, taste oriented food. Now this option, the option of replacing the food, it is a effort that is being taken by the staff only if the management is supporting you. What if management does not encourage? Now, see, on the spot, there is a manager. A manager is employed. On the spot, he has to make a decision whether he has to replace that bad product with a good one or not. He has to make an on-spot decision. If management is not supporting his decision, will he have that encouragement to change the product next time? To offer a new one? Navya, no, please don't talk when I'm talking. So a good management will tell its staff to handle the customers very carefully. So a good management towards customer, good management of staff. Now imagine the staff who's working in our restaurant. We are taking very good care. We are paying them very good amount of money. We are taking care of, what time they're coming, what time they're going out, proper on time. We leave them. We are taking care of their additional, any difficulties they're facing through, any personal issues they're going through. We are helping them with also that kind of, situations. And we are creating a very good work culture in the organization. So don't you think that these people will go out and tell, this particular restaurant, there's very good, care that has been taken. for the staff. So automatically what happens? A lot of people would naturally want to come and work under your brand. So automatically that enhances the brand value. So good management towards customer, a good management towards the staff. Then what else? Under management. So management, do you think plays a very vital role? So good management, overall good management of the business from every perspective. So you'll buy a lot of raw materials from outside vendors. So how do you treat your vendors? Are you making the prompt payment? So all this is called management. You buy goods from a vendor, you committed him paying, I'll pay within 1 week, and for 10 months also you don't pay. So what will be the reputation of our business? You're not giving the payment on time to the creditor. You purchase the raw material from the departmental store. You're not making payments for 10 months also. So tomorrow will he give us that goods on credit? No. So the brand is getting hit. So next time what will he tell? If anybody is coming from Tasty Bites asking for credit, kick him out of the gate itself. So good management is very important. Do you all agree with me? A good management will enhance the value of the business. Next, fifth one.
Sir, advertisement.
Advertisement. All kind of advertisement, digital, physical, whatever you say. So this will also enhance the brand value. The more and more advertisement is done, the more and more publicity is being done, it comes to the visibility of the people. Even if you don't want a product, if it is branded 10 times in different ways and it comes to your vision, no, you'll at least want to try it once. So advertisement will also play a significant role. So like that, there are so many factors that you have to take into consideration to ensure that the business is increasing, your turnover is increasing, and thereby your profit is increasing. Touch your heart and tell me, to do all this, is it an easy task? How much of blood and sweat that you have to shell out every single year to ensure that you come to that level? Can you imagine? I've been running this academy for almost now 4 years is completed. We are stepping into 5th year. I've had sleepless nights all these 4 years. I've been the single person doing all the kinds of work from end to end, which is dangerous though. But being an initial startup, there are certain constraints. So you do so much of hard work. Now slowly, if you see, there is a reputation that I've built for FFL. And because of the reputation that I've created, you guys are here. So what did I do? I took a good, I took classes in a very good way. So the services you liked, the way I talk with all of you, that you liked it. So services were good. Pricing initially was less. Now that it has come on the higher side, but it is worth the ambience, the service that has been provided. Location is very prominent. It is there in center of the city. So in all 4 directions, people can access and come. Location plays a very crucial role. I started this academy initially in Pune Rajpura, just in one corner. People from Sai Baba Colony and Ramnagar had difficulty in traveling. So I shifted it in center, RSpura. So now do you understand how location plays a vital role? Management, the way I interact, the way the staffs interact, especially Anita ma'am. So management plays a very good role. So if you're trying to approach me, if I'm not reachable, you're there to call Anita ma'am and discuss with her. Even if she's also not reachable, somebody else will be there. But you're not unanswered. The way they are talking to your parents, the way they're talking to you, everything has been taken care. Advertisement to some extent here and there, we do it. To save money, we take help of you guys to put posters on your WhatsApp and Insta status. So this, everybody invariably goes through this process. So it takes a lot of time and efforts, a lot of time and efforts. That is how you build the brand value of the business. So like that, guys, year on year, we have worked together very, very hard. And we have reached to the 5th year where the company is doing decent profit. Now, Tasty Bite has been doing a very good business in these 5 years. Let me complete, I'll come back now. In these 5 years, Tasty Bites has been doing excellent business. And somebody has keeping an eye on us. A big fish, a shark has kept an eye on us and the growth what we've achieved. And that shark, that eye is none other than the great Annapurna. Now, Annapurna, Coimbatore people will be knowing all the people who are outside Annapurna. So I mean, out of Coimbatore. So whenever you get an opportunity to visit Coimbatore, do not leave this place back without having a coffee in Annapurna and without having dosa, idli, sambar in Annapurna. This is must have in. That's why you guys will not believe. You guys will not believe. I am a huge fan of Annapurna. Okay, listen. Shh. I'll tell a small quick story. So this is when I was in 6th standard. So I'll tell you my story. So this was in 6th standard. I had appendicitis. So we had to get that operated. Listen. So I had my surgery completed in somewhere in the afternoon. And I was very hungry by evening because entire day I have had nothing. I never had any solid food throughout the day because right from early 6:37 in the morning, my stomach started paining. And somewhere in the afternoon, the surgery was done. And then I was very hungry by the time they shifted me to room, right? So I was very hungry. So dad was standing beside me. He's like, I told dad, I'm hungry. Like, can you get me something to eat? So he's like, what do you want? I said, I want Annapurna dosa and coffee. Now, that is my craze. And you will not believe, it was a laparoscopic surgery. Generally, when you do a surgery for a day or two, you don't get solid food. You are on IV so that, there is no vomiting. But for me, within that 4 to 5 hours, they made me have dosa. Only one scam that they did with me is that they gave me dosa, but it was KG Hospital's canteen dosa. Unfortunately, but you can imagine that is the kind of fan following I have for Annapurna dosa and coffee. Anyways, coming back.
Sir, new coffee. I don't like coffee.
You don't talk to me. Now, shh. Guys, please. I have a lot of things to cover. We have to finish. Please cooperate. Now here, guys, Annapurna has been observing you. And they have showed the interest. They have come and approached us telling that we want to buy out your business. Annapurna wants to buy out our business. So we have two options. Either we say, no, get lost. We are doing quite well. We don't need to sell our business. Or you would say, okay, we are interested. What deal do you have for me? This is the question that you will ask Annapurna. So here, let's go to the second scenario where you accept Annapurna's offer. You are willing to listen what Annapurna is having a deal for you. Now listen to me very carefully. If at all you sell the business to Annapurna, from 23-24 onwards, it is Annapurna who will be running the business. Tasty Bite will be same as it is. The ownership will change if at all the business is being sold. No. Now, please tell me one thing. What minimum price you would expect from Annapurna in order to sell your business? I'll give you a hint. We are in 5th year now, and I'm giving you a scenario of balance sheet. This is the balance sheet of the 5th year. So here the capital is 15 lakh. External liabilities, that is the bank borrowing, creditors, everything is, let's say 10 lakh. And the total assets, 25 lakh. So what is my total? 25 lakh. So I'll shoot a question to all of you. This is a scenario. Now tell me, what is the minimum price that you would want from Annapurna in order to sell your business? I'm telling minimum. First offline, they will come to online.
It will be more than 25 because you know that.
I'm telling minimum.
50 lakhs. 28.
28. I don't know where she got 28, but okay, I'll accept it. 28. 25. 25. 50. 25. 50. 25. 30. 25. Minimum. Some random number, huh? Okay, how many of you say 25? Raise your hands, offline people. Minimum, I'm asking. 25. Okay. All those who are saying more than 25, raise your hands. More than 25. Okay. Anybody less than 25? Less than 25. What value? 15. 10 lakh. 10 lakh. Arshit. Free. Oh wow. Watch out, buddy. I'll keep an eye on you. You bloody develop the startup business, and after 5 years, I'll come and ask the business. If you charge me, I'll kick you out. I'm telling you. It's free, it seems. Online people. My question to all of you. Please raise your hand.
15 lakhs, sir.
Krishan says
15 lakhs.
15.
Yes, sir.
Okay. How many of you say more than 25 lakh? Raise your hands in Zoom, please. More than 25. You can raise your hand in Zoom. Hariharan, Hidika, Subiksha, Ramji, Selina, Alvin. Okay. How many of you say exactly 25 lakh? Raise your hands. Others, you can put it down. Online. Hariharan, Ananya, Niharika, Ashmita, Sumanyu, Sarthi, Manisha, Janani. That's all. Swati, Ritik, Driza. Okay. How many of you say less than 25 lakh? Raise your hands. Manisha, Lakshana. So do you guys mind telling the value? Less than 25 means how much? Less than 25 means?
Sir.
15 lakh. Lakshana says 15 lakh. Okay. I'm telling minimum. Lakshana says 15. Akshit. Okay. All those who said, I've asked minimum. So all those who said 25 and above, you're wrong. All those who said 25, you're wrong.
10.
All those who said 10, wrong.
15.
15 is the right answer. I'm talking about minimum. Now understand this. Annapurna is taking your business as it is, which means this balance sheet now, what is there, will become balance sheet of Annapurna. So 25 lakh worth of asset, what you have built, they will take it. So total asset worth 25 lakh, they will take it. They are also taking the liability. So 25 lakh rupees worth of assets, if they're taking from that asset, don't you think they'll pay the liabilities as well? In that case, if I minus the external liabilities of 10 lakh, I'll be left with 15 lakh rupees, which is our money. So that is the minimum amount which we will collect from the buyer of the business. Don't you think that this should be the minimum amount? This is the capital that you have invested. This is the money that belongs to you. Forget Annapurna. Today, if you also close your business, you will sell all the assets. 25 lakh rupees you will get. This 25 lakh rupees you will take home. You have to pay 10 lakhs to the external liability holders, bankers and the creditors. Then balance, how much money you will take home? 15 lakh. So why 25 lakh? Why 50 lakh? And madam is still in 10 lakh. So the minimum amount that you will ask for is 15 lakh. And you know who will ask for 15 lakh? A business which is into loss. Let's say if Tasty Bat is continuous in loss for 5 years, if Annapurna feels power on us, they'll come and buy this business. Why are they interested in business? Because the quality is good, price is less, location is good, management is good, advertisement is all done, okay. But still we are not getting customers. Something we are missing. That's the reason we are not able to develop the customers. But Annapurna knows how to attract customers. So Annapurna says location is super. You forget everything else. I want only location. So for that reason, Annapurna is willing to buy your business, but your business is into loss. So how much will Annapurna give you? Your capital part alone they'll give you. But now we are talking about a scenario where you are in profit, boss. Now tell me, will you sell your business for 15 lakh rupees?
No.
Online people.
No, sir.
You will say, sir, more than 15 lakh rupees. So somebody will say, sir, I want to sell at 30 lakh. Somebody will say, I want to sell at 40 lakh. Somebody say, I want to sell 50 lakh. Somebody say 1 crore. Now, this is where the problem comes.
It's all about 25.
I asked minimum. Now, this is where the real problem comes in. Now, how do you determine how much money should we take from Annapurna? So in this topic, we are going to learn how to calculate this value. Now listen to me very carefully. The money that Annapurna is going to, okay, before that, all of you know this statement, selling price is equal to cost price plus profit. Selling price is equal to cost price plus profit. This equation all of you know or anybody does not know? All of you familiar with this? Guys, now, selling price is the price that we are selling the business to Annapurna. So can I say this is the money that Annapurna will pay?
Yes.
Guys, can I say selling price is the price which Annapurna will pay to us to buy the business? So here technically we call this as PC, not Priyanka Chopra. Purchase consideration. Purchase consideration. This is the value. Consideration is the value that Annapurna is paying to purchase the business. So selling price is equal to purchase consideration. This is the amount. This is the amount which Annapurna will pay. Cost price here means your capital, which is also called as net asset. The 15 lakh rupees money, what you asked, no, minimum, that is called as capital. Capital, in other words, is called as net assets. Now, listen, wait, don't ask. I'm telling you. In 11th standard, you would have studied one topic called as accounting equation, where they said that asset is equal to liability plus capital.
Asset.
If I want to find out capital, what will be the equation? Asset minus liability. So asset, total asset minus external liability is capital. Here asset in my example was 25 lakh, liability was 10 lakh. So what is the capital? 15 lakh. This capital ka another name is also called as net asset. That is, from gross asset, if I pay liability, I'm left with the balance net asset. Makes sense now? Now, capital is, in our example, 15 lakh. Now, when you sell this business to Annapurna, whatever profit you were earning so far, Harshit, who is going to earn that in future now? Online people, my question goes to all of you. In these 5 years, whatever profits that we have earned, who is going to earn that profits in future? Online people, my response, I want response from all of you, please.
Annapurna.
Annapurna is going to enjoy the profit. So you are laying down the foundation. You are doing all the hard works, reputation, everything you built. And in no time, somebody else is coming and taking over your business and going. Just like that. Will you allow it? Tell me.
No, sir.
Now, if you want to sell your business to Annapurna, or in other words, if Annapurna really wants to buy your profitable business, they have to buy first profits from you. When you are selling the business as it is to Annapurna, Annapurna is going to enjoy your piece of profit, boss. So Annapurna has to pay the price for it. When Annapurna is taking over the business, along with the business, it has to buy profits from you. So here, the amount of money that they pay to buy your profits technically is termed as goodwill. So goodwill is nothing but it is a price paid to buy the future profit of somebody. So let's understand from this. This is Tasty Bites. And this is Annapurna. Tasty Bite will give the profits to Annapurna, which means it will sell its profit to Annapurna. Sell its profit to Annapurna. It is selling its profit to Annapurna, which means Annapurna has to buy it. When you buy something, in return, what are you supposed to pay? Money. So Annapurna will pay money. And this money, what you pay, is technically termed as goodwill. So goodwill you are paying for buying profits. Which profits are you buying? Future profits. You are buying future profits. So which brings back to the question, goodwill is nothing but it is the present value. It is the today's value of expected future profit that has been sacrificed. So whatever future profit of Tasty Bites which is sacrificed towards Annapurna or for the Annapurna, that profit today is termed as goodwill. Today, you are selling the business. So when you're selling the business, you would want from Annapurna two things. One, the capital what you've invested, that you want back, plus the profits you want to buy. Now the question is, how do we calculate the future profits? Because future means you have to predict, anticipate or predict. You cannot predict randomly anything. No, there has to be a system. There has to be a process. There has to be a logic. There has to be an evidence to substantiate why you are saying that I want 1 crore rupees. Chuma, you cannot say, no, okay, you want this business? Give me 100 crores. You can't talk. You need to substantiate. If you're asking 1 crore rupees as goodwill, you have to substantiate why should I pay goodwill of 1 crore rupees to you? Or Annapurna, why you should pay 1 crore rupees of goodwill? So in this entire chapter, we will learn different methods of how to calculate the goodwill. And on what basis we have to calculate? We are going to calculate the future profit. Goodwill is nothing but it's a future profit. So how are we going to calculate the future profit? And what is the basis of calculating the future profit is very important. Because you're going to predict the profit. So on what basis are you predicting? That logical understanding is very much required. Different experts have suggested their own logics and given different methods. So it is at the convenience of Tasty Bite and Annapurna to take up whichever method they feel is suitable for both of them. So in this chapter, we are going to learn different methods. So in short, if you have to talk about this equation is very important. Purchase consideration is equal to capital or net asset plus goodwill. Capital or net asset is basically the cost that you have invested in the business. The 15 lakh rupees is the money that you have invested in the business. That is your cost of investment. So when you're selling the business, this is the minimum amount that you have to get. And over and above that, you have to get goodwill, which is nothing but the reputation what you've created. And on that reputation basis only, you're getting so much of future profits. I'll give you an example. Let's say in first year, when you started the business, you serviced nearly about, let's say, 1,000 customers. Your quality of the goods and services was good. Price was excellent. Location was super. Management was super. You did the regular advertisements in regular intervals. Because of that, the next year, your customers have become double in number. Then third year, it became 4,000. Then became 10,000. Now it has become 15,000. So as on date, the present year, which is just gone by, you have serviced 15,000 clients. Now, when Annapurna is taking over this brand, please understand, he will continue the same branding. Guys, please understand, when Annapurna is taking over, he is not going to keep it as Annapurna. Now, if you remember, last year, Baiju has acquired 20 companies. One among them was Akash. Have they changed the name Akash into Baiju? No. Akash is there. Besides that, they put Baiju also. Because Akash, over a period of time, had created that reputation. So people are not looking to Baiju and coming to Akash. They were looking forward that word Akash.
So even Kanan was bought by Reliance. They also added Kanan Smart.
Yeah, correct. No. So here, when Annapurna is taking over Tasty Bites, they will retain the Tasty Bites name because there is a brand value attached. And to retain that name only, boss, you have paid the goodwill. Please understand. Or if Annapurna has to start from scratch, why would he buy this business? Think about it now. It's a pure logic. I'm telling you, accounts, if you understand, no, it's so logical. Everything is so understandable. And I'm telling you, you guys are commerce people. You're going to do jobs in future in any big companies, or you're going to have your own companies. So all this is very much relatable to your future work. So why would Annapurna pay that extra amount of profit when he wants to have his own outlet? So Annapurna is now into South Indian dish. Now he wants a Tasty Bites because he wants to penetrate the multi-cuisine restaurant. And now the question that arises is that, sir, why is Annapurna buying Tasty Bites? Why can't he start the multi-cuisine restaurant by itself? Correct, no? If Annapurna is starting in 23-24, is starting a new brand, Annapurna multi-cuisine restaurant. Now let's imagine this 15,000 customer. Now Annapurna is, let's suppose, buying Tasty Bites as it is. In 23-24, bare minimum, can I say 15,000 customers will continue as it is? I'm telling minimum. I'm telling Annapurna buys Tasty Bites. Now, if Tasty Bites business is run by Annapurna, 23-24, can I say bare minimum 15,000 same customers will repeat? Because this is an industry which is repetitive in nature. So customers will keep on repeating. 15,000 minimum it will continue. On the other hand, if Annapurna is starting the multi-cuisine restaurant all by itself in a new brand name, do you think the same 15,000 customers will come in year one of Annapurna? Annapurna is starting a new brand. So XYZ brand. Do you think here in the very first year of Annapurna, they will have 15,000 customers? Let's say they'll have only 1,000. Now what is the difference? 14,000. There's a difference of 14,000 customers. Can you multiply with the revenue and tell? 14,000 customers. So can I say the extra 14,000 customer what Annapurna is getting is because of our hard work, our smart work, our brand value that we have created. So the money that we are charging over and above the cost price, over and above our net asset, over and above our capital is nothing but for the hard work that we have done for the rest of the years, because we have done a very good base. And now when it is time to enjoy the fruit, which is profit, somebody else wants to buy. I'm willing to sell it, boss, provided you give me my justified price. So the extra money over and above what you give is called as goodwill. So in this case, it could be, let's say, 40 lakh rupees. So 15 lakh. So let's say Annapurna is okay with this 40 lakh. You are saying that, Annapurna sir, if I'm continuing this business, because of my reputation, in future I can earn 40 lakh rupees. Annapurna says, okay, take it. So Annapurna is paying you how much totally now? 55 lakh. So this 55 lakh what Annapurna is paying you, it is called as purchase consideration. These terms are very, very important. Purchase consideration is the price that the buyer is paying you for buying in the business. It is called as purchase consideration. Purchase consideration. Purchase consideration is the value of the money that is being paid by the buyer for buying the business, for buying the profit. This is the value for buying the business. This is the value of buying the profit. Yes, Navya.
So won't the number of customers increase considering Annapurna ka bhi naam aayega aur Tasty Bites ka bhi aayega?
Now what Navya is saying, sir, will this not be 16,000 or 20,000 rupees? Of course, the increment of 5,000 could be reason, could be two. One is the Tasty Bite brand is there, so maybe through word of mouth reference, more people are coming. But you cannot say that is only because of Tasty Bite. Maybe after Annapurna has come, the services become even more better. The quality has become even more better. So now the extra 5,000 count that has come, that attributes to whom? Annapurna. So when people will sit on the table and discuss the deal, no, they will consider all the different kinds of factor before deciding what value. Now what we are discussing, no, chiller, we are discussing chumma just like that. In reality, these kind of meetings goes several times. You will involve a lot of analysts. You will be involving either CA or MBA or big professional people who will help you to evaluate the business. Have you heard of this word called as valuation? Valuation of the business. It's something related to this only. But that valuation game is a bit more different. This is little bit different. You say, no, today Byju's is valued at so much $1 million. Flipkart is valued at so many $1 million. Paytm is valued at so many $1 million. So that valuation, what we're talking about, no, this is one of the methodologies of valuing the business. But in startup world, there are so many other parameters which is considered. Here, the only parameter that is considered is profit. We are not considering any other parameter. Today, when I'm learning this particular topic, the valuation is purely done on the basis of profits. Am I clear with what I'm saying? In reality, apart from profit, there are so many other parameters or factors which the buyer and seller has to take into consideration before this deal is being matured and finalized. Okay, not okay. Online payment. Is the concept of goodwill understood? Please tell me.
Yes, sir.
Yes.
Sir, I have a doubt.
Yes, boss.
So will the management, those employees will be changed when a company buys another company?
Correct.
Will that be changed? The employees?
Now the question that they're asking is, sir, when Annapurna is taking over the business, Purvi, will the management change? See, ownership will change. Management may or may not change. It is purely an agreement between the buyer and seller. If Annapurna wants everything to be new, that is, he wants the chef to be completely new. He wants his own chef. He wants his own serviceman. He wants his own management. Then yes, everything can be changed, but it is not compulsory. It is not compulsory. It is purely optional. If Annapurna feels that no, the current management, current staff, the current chef, everything is doing excellently well, then there is no need to change. They can continue as it is. Have I answered your query, Kana?
Yes, sir.
Now, next textbook. Please open your textbook. Goodwill is an intangible asset which places an enterprise at an advantage due to which the enterprise is able to earn higher profits without putting extra efforts. Listen to me very carefully. Goodwill is an intangible asset. All of us know. And this intangible asset is putting the enterprise or business into advantage. What advantage? It is able to earn higher profits without putting extra efforts. Now, please understand the amount of effort that you'll put in year 1. Do you think the same amount of effort you'll put in year 5? Guys, in 1819, you would have worked nearly about 15 to 18 hours to ensure that you get good service and everything is in place. To ensure everything is in place, you would have worked 18 to 19 hours. Do you think in year 5 also do you need to really work 15 to 18 hours? Because at the 5th year also, if you're putting same kind of effort, then you're not doing business. You're not in the growth phase, you're in survival phase still. So now imagine here you're ending up putting only 4 to 5 hours and you're getting better customer, better turnover, better profits. Why has this happened?
Now the business is established.
It is because of the hard work that you have done in the past. It has contributed directly in enhancing the value of the business. And because now that business is established, the brand value has been gained, the brand image has been gained. So without putting any extra efforts in year 5, you're earning higher profits. First year, you put too much of efforts. You got profit only from 1,000 people. Now you're getting profits from 15,000 people, where your efforts is only 4 to 5 hours. So is the first sentence making sense or not? Online people, is it making sense or not?
Yes, sir.
Yes, sir.
Now, Goodwill is present value of expected future income. So Goodwill is nothing but the value, that 40 lakh what we calculated is the value that the Annapurna has to pay at present. But that value, but what you're paying today, 40 lakh, is what is 40 lakh, you understand, no? 55 lakh totally Annapurna is paying. In that 15 lakh is towards your capital and 40 lakh is towards your goodwill. So that goodwill Annapurna has to pay in the present date, which is nothing but the future profit that Tasty Bite is sacrificing. So goodwill is basically the value that you're getting today for the future income. For the future income. I'll stop this here. Why I'm not reading forward is because this explanation is not a general explanation. This explanation, what they're giving, that it is in excess of normal return of investment, is basically an explanation towards a particular method called as super profit method. So when I come to super profit method, I'll come back and read this theory. So once you understand that concept and then read this theory, I'll link it and make you understand what they're trying to say. As of now, just leave this part.
I think it's like the line change.
No, I have that one also. But the reason why I did not take this book is because this color was dark. This was light. That's why I thought of reading. Okay. So here, what is changing? Okay. Goodwill is okay. As per your existing book, it is goodwill is an intangible asset which places an enterprise in advantage, because of which enterprise earns higher profit. What is there? Without putting extra efforts. It's fine. At the end of the day, meaning is same. So today you're earning higher profits than what you were earning. Same example. Earlier you are spending 15 to 20 hours and earning profits from 1,000 customers. Today you are spending 4 to 6 hours and earning profits from 15,000 customers. So earlier we were earning normal profits. Now we are earning good profits. Meaning is same. Wordings are different. Emotion is still same. So goodwill is present value of expected future profits. So goodwill is nothing but it is a money that Annapurna is paying to you for sacrificing your future profits. Online, somebody called me.
So this future profit refers to how much years future profit, sir?
Now that I will disclose when I do the method. The question that they're asking is, sir, Tasty Bite saying that I'm sacrificing future profit. So for that future profits you have to pay. Now, Tasty Bite will say that I will earn profits for 100 years. So do you think Annapurna will pay the future profits for 100 years? If they pay profits for 100 years, when will they make money? Hello? So there is a limited validity. How many years? Now please understand this logic. Though I'll explain it in the practical question. Please understand. Here Annapurna will ask you one question. Because of your brand and reputation, for how many years do you think the customers will repeat because of your management or because of your marketing or whatever is the reason? Because of your goodwill, what you have established, whatever goodwill you have established, whatever image you have established, considering that image, how long do you think your customers could repeat? If you say infinity, Annapurna will straight away get up and go out. You have to give a limit. So you will say, sir, because of my brand image, I think for next 2 years, I will be in profits. I'll be in so much of profit. Why? Because after 2023, from 23-24 onwards, Annapurna is taking the responsibility of the management. If Annapurna's management is better than Tasty Bites, if Annapurna's Tasty is better than Tasty Bites, if everything they are changing, the credit of earning higher profits will go to whom? Annapurna. So Tasty Bites brand value will continue only for a certain period. It cannot be for infinity. So you have to tell me, define that how much years of future profits you're going to buy. Are you going to buy 2 years of future profit? Are you going to buy 5 years of future profit? Are we going to buy the 10 years of future profit? So it has to be agreed, and it will be agreed between both the people, but both of them will be okay with that number. So we are not going too much into detail. I'll talk about that when I do the practical question. Now let's go forward. Characteristics and feature of Goodwill. I'll finish this part, then I'll give you a break. Please don't ask for a break. The characteristics or the feature of Goodwill. Goodwill, it is an intangible asset. That is, it does not have any physical existence and has a value. Guys, intangible asset is an asset which cannot be touched, but it has got a value. It does not have any physical form, but it has a value. So Goodwill, I'm recording. So now let's suppose Annapurna is paying 40 lakhs for Goodwill. No, what is the journal entry for that? Goodwill account debit to cash or bank. Goodwill account debit to cash and bank. So Goodwill you have debited. So this will go in balance sheet and sit where? On asset side. Because if you debit anything, it becomes a debit balance. So in balance sheet, on the asset side, Goodwill is 40 lakh rupees. So with land, building, we also have Goodwill. So if you ask me to show land, I can show you where land is. If you ask me to show building, I can show where building is. If you want to touch land, I can make you touch land. If you want me to make you touch building, I can make you touch that also. But if you ask me to make you touch Goodwill, where will I go? Huh? You cannot touch. But it has got a value. So Goodwill has got a physical existence, but it does not have a value. It does not have a physical existence, but it has a value. Thus, it is a non-fictitious asset. Now, you might get an MCQ question. You might get an MCQ question or a true and false question. So let me ask MCQ question first. Goodwill is dash. They'll give you 4 options: intangible asset, tangible asset, fictitious asset, and some other option. Now people get confused between 2 options: fictitious asset and intangible asset. The right answer is intangible asset. It is fictitious asset is wrong. Fictitious asset means it's a fake asset. The example of fictitious asset is, we have discussed this already in 11th standard. Deferred revenue expenditure and advertisement suspense. You remember that I told you we pay 5 crore rupees to Virat Kohli. So that is the deferred revenue expenditure. I'll give you one quick example. To make ad shoot video, I've hired Virat Kohli, and for that I've paid 5 crore rupees because he's my brand ambassador. So to do that ad video, he's taken 5 crore from us. So this 5 crore rupees, what you pay to Virat Kohli, the journal entry will be what? If you say advertisement expense account debit to cash and bank, your answer will be wrong, because the entire 5 crore rupees is not an expense, because this 5 crore rupees what you're paying to Virat Kohli, and the video what you're getting, you are planning to run that video for next 5 years. That is the contract that you've done with Virat Kohli. You told Virat Kohli that this video you will run only for so many number of years. You make a contract. So this 5 crore is for 5 years. Can I record the entire 5 crore of expenditure in the very first year? If I record the entire 5 crore rupees in the very first year, which principle am I violating? Matching principle. Because matching principle says what? You need to record only that much expenditure which is contributed in earning that year's income. So this 5 crore rupees what you have paid to Virat Kohli, you are going to earn income for how many years? 5 years. Therefore, you need to split that 5 crore into 5 years. So what will be your entry? Advertisement expenditure account debit 1 crore. Deferred revenue expenditure account debit 4 crore. To bank 5 crore. So please understand this very carefully. This is advertisement expenditure which will go to the P&L account of first year as expenditure. This is as good as your depreciation. If you buy an asset for 5 crore. If the life of the asset is 5 crore, what do you do, my dear friends? Don't you do this? 5 crore is the total value of the asset. Divide by 5 years, you get 1 crore. This is the depreciation. Correct? No? Same way here also, this 1 crore is the advertisement expenditure. But this 5 crore rupees, you will not call it as capital expenditure. This is neither revenue expenditure. This is deferred revenue expenditure. In 11th, I've clearly given the difference between capital expenditure, deferred revenue expenditure, and revenue expenditure. Now, this deferred revenue expenditure will go to balance sheet under asset side as deferred revenue expenditure. Now, this deferred revenue expenditure, this asset is called as fictitious asset. It's a fake asset. What do you mean by asset? Asset is something what you own. Land, building, I own it. So I can sell it in future, I can make money. Anything that I expect to receive in future is asset. Asset has got two meaning. Asset means two things. Anything that we own is asset, or anything that we expect to receive in future is asset. Debtor is the money that I'm expecting to receive from a customer in future. So that is my asset. Goodwill, this 40 lakh rupees, Annapurna can sell this goodwill to somebody else. So for that, Annapurna can get future money. Still asset. But touch your heart and tell me, this 4 crore rupees, what you're showing in balance sheet as asset, no? Can you sell this to somebody? Will somebody pay this 4 crore rupees to in future? No. So it is coming under balance sheet as asset because of the accounting rules and regulations. But technically, it is of no use to me. Land and building, used to me. Machinery is still usable. I can sell something and recover some money, no? But fictitious asset, deferred revenue expenditure, I cannot sell in future. That's why it is called as fictitious asset. Fictitious asset is a fake asset. I'm recording this asset on the compulsion of the accounting rules and regulations. But in reality, I'm not going to benefit in future. Whereas all the other assets, I'll be benefiting in future. In some way or the other, I can encash it. I can liquidate it. I can liquidate it. But I cannot liquidate deferred revenue expenditure. So that is why they're telling that goodwill is not a fictitious asset. It is an intangible asset. You can sell this 40 lakh worth of goodwill that Annapurna is paid. No, Annapurna can sell this goodwill to somebody else. It is very much possible. Point number 1 over. Second point, it does not have an existence separate from that of enterprise. Goodwill and the business is not different. If business flourishes, goodwill is automatically generated. More business flourishes, more brand value is being created. So it goes hand in hand. Business keeps on progressing, the brand value keeps on building. So business and goodwill are linked to each other. They are not separate. It does not have an existence separate from its enterprise. It goes hand in hand. Thus, normally it has realizable value when the business or a part of business is sold. Now today, I can say FFLA is worth 5 crores. I'm telling FFLA's goodwill is 5 crores. This 5 crore rupees actually becomes a goodwill when somebody pays that 5 crores to me and takes FFL as it is. Here in this case, if Annapurna is paying 40 lakh to Tasty Bite, the goodwill what they have paid, that is called as a purchased goodwill. If somebody pays 5 crore rupees to FFLA as goodwill, that 5 crore rupees for that person is a purchased goodwill. Now, if nobody is coming and buying business, today nobody is buying my business. I tell that my value is 5 crore rupees. Is that purchased goodwill or is this self-generated goodwill? Self-generated goodwill. I feel good about my FFLA saying that, oh, my business value is 5 crore rupees. But really, that goodwill matures when somebody is paying the money. When will somebody pay the money? When the entire business is purchased or a part of business is being purchased. Now today, when I explain the context, it is a context where the entire business is sold out, which means entire profit is sacrificed. Do you agree with me? When I'm saying Tasty Bite is selling 100% of the business, which means Tasty Bite is sacrificing 100% profit. Now in partnership, that is next topic onwards, we are not going to see business as it is being sold. We will discuss one of the partner is sacrificing his profit. A part of the profit is being sacrificed. That's what the point is mentioned here. Thus, normally it has a realizable value when the business is being sold. So goodwill is realized. When is Tasty Bite realizing the 40 lakh? When the entire business is sold or when a part of business is sold. If Tasty Bite is selling half of the business, so what will be the goodwill? Half, which is 20 lakhs. So goodwill comes into picture only when the business is entirely sold or a part of a business is being sold. Okay, not okay. Online people, how many of you have gone to sleep mode? Raise your hands. So many people video off, 100% sleeping. No video, no class. I'm telling you very clearly. I'm very particular that everybody's video has to be.
Yes, raise your hand when you go into sleep mode.
Okay, Sumanyu Saisha has raised your hands. Nishka, Ramji, I've asked a question. If all of you have gone to sleep mode, raise your hands. So everybody has raised your hands. Wonderful. No, they are honest. They said, sir, we are sleeping. We are honestly admitting. Thank you.
Break. Please.
I'm giving you break.
Now.
I'm giving you break. Wait.
Now.
Third point. Goodwill will help you earn higher profits. This point we have discussed. Guys, no disturbing. I'll get annoyed. I'm telling you, I'll give you a break. I want to complete these 7 points because the flow will be broken. That's fine. Please cooperate. Goodwill will help you earn higher profits. Every year, when you earn higher profits, automatically the value of the goodwill will become higher. So today, when the 5th year, you've calculated the goodwill is 40 lakh. If Annapurna does not buy at the end of 5th year, if Annapurna is buying at the end of 6th or 7th year, will you still charge the same goodwill?
No.
Because in these 2 years, your value has further increased. So now you have to revise the goodwill, and the goodwill value will be some higher amount. So it helps in earning the higher profits. Fourth, it attracts customer to come frequently. Obviously, a good brand name, you'll get good customers frequently because your brand is reached to that level because of the service or quality of what you provided. So naturally, the good brand name, good reputation will attract more customers. Fifth one, it comes into existence due to various factors such as location advantage. I told you, you're bad at your product and services. You are bad at your management. Everything is bad. Price is bad. You've kept too much of high price. Staffs are not, what you call hospitable. There's no hospitality, nothing. Still, Annapurna is willing to buy your business. You know why? Your location is an excellent place. So Annapurna says that you sell the business to me. You don't know how to run the business. I'll run the business. You just give me that location, that place. I'll run the business. So location sometimes plays a very crucial role in enhancing the value of the business. Second, favorable contracts. Now let's take an example of FFLA. FFLA is done, or let's say Kalpuriksh Academy is done tie-up with multiple institutions, multiple academies to tie up for multiple different course which is not available anywhere. Now, do you think that my academy has got some additional advantages nobody's got?
Yes.
Now let's suppose Baiju is willing to come and buy this. He's willing to pay that money. Why? Because I have something which nobody else has got. So these were that factors. I told you, apart from profit, there are certain other factors which will determine what will be your value. These are those factors. So you have certain contracts which nobody else is having. You have certain brand. Your brand is gone so high. So let's suppose if I talk about Baiju, Baiju's brand is next level. Now there's a American company who wants to come and buy Baiju. Why? Because the reputation is so high. The brand value is so high. Trademark. I'm having some trademark which nobody else is having. And because of the trademark, you're able to earn more profits. Trademark means what? Know-how. There's a know-how which you have got in your name. Patent, trademark is different variety. It is similar, but it is applied to different context. Copyright, trademark, patent is similar, but it is applied for different things. So you have certain trademark patents which nobody else has got. You have certain market reputation which nobody else has got. So this will place you at advantageous position where you can claim high goodwill compared to other businesses. 6th point, value of the goodwill is subjective and depends on the assessment of the valuer. So valuation is not like you follow any method what you've studied tomorrow and chumma apply that. No. Buyer and the seller has to mutually sit and understand and justify each other which points you want to take or which points you want to leave. So it's a subjective decision. It is not concrete that you apply any random formula and goodwill will come. No. It has to be evaluated in different perspectives. So it is subjective. In the context of partnership, it is the value of the share of profit sacrificed by the sacrificing partner. So here you will never come across any situation where the entire business is being sold. Here you will come across a situation where a part of the profit is being sacrificed by the partner. Why that is happening? Why is he sacrificing part of the profit? What are the scenarios when the partners are sacrificing that profit? You will understand eventually in the upcoming topics. So these are the important points that I wanted to put into your head. I'll not take too much of theory. After that, just one small concept that I'll explain and we'll start doing the practical questions. So let's take a quick break of 5 minutes. We'll come back and continue. Thank you.